Let me ask you something real quick. When was the last time you actually sat down and looked at what your credit cards are costing you? Not just the balance, not just the minimum payment, but the actual, real dollar amount that is walking out of your pocket every single month because of how you're using them. Most people never do this. And that's exactly why most people are losing money without even realizing it. Today, I'm going to show you the 5 biggest credit card mistakes that are quietly draining your wealth. And I'm not talking about small stuff either. I'm talking about mistakes that can cost you hundreds, sometimes thousands of dollars every single year. Let's get into it. Before we get into the mistakes, I want you to understand something important. Credit cards are not the problem. I know a lot of people out there will tell you to cut up your cards and never look back. And look, if you genuinely cannot control your spending, that might be the right move for you. But for most people, the problem isn't the card. The problem is the behavior. Because when you use credit cards correctly, they literally pay you to spend money. Cashback, points, travel rewards, purchase protection, sign-up bonuses. These are real benefits worth real money. But the moment you make one of these 5 mistakes, all of that value disappears. And instead of the card working for you, you start working for the card. Mistake number 1. Carrying a balance. This is the big one. This is the mistake that costs people more money than anything else on this list. And it's shockingly common. Here's how it works. When you don't pay your credit card bill in full every month, the remaining balance starts collecting interest. And credit card interest rates are not friendly. The average credit card APR right now is somewhere between 20% and 28%. Let that sink in for a second. If you have $5,000 in credit card debt at 24% interest and you're only making minimum payments, you will pay over $4,000 in interest alone before that balance is gone. You borrowed $5,000 and ended up paying nearly $9,000. That is not a financial tool working for you. That is a financial trap eating you alive. And here's the part that really gets people. They think they're winning because they're earning cashback rewards. Maybe 2% back on their purchases. But they're carrying a balance at 24% interest. You cannot earn your way out of that math. The interest will always cost more than the rewards you earn. Always. The fix is simple, but it requires discipline. Pay your balance in full every single month. Not the minimum. Not half. The full amount. If you can't pay it in full, you spent more than you should have. That's the rule. Mistake number 2. Only making the minimum payment. This one is closely related to the first mistake, but it deserves its own conversation because a lot of people genuinely don't understand how dangerous minimum payments are. Credit card companies are not your friends. They are businesses. And their business model depends on you making the minimum payment every month and nothing more. Here's why. Let's say you have a $3,000 balance on a card with 22% APR. Your minimum payment might be around $60 a month. $60 sounds manageable, right? Here's the problem. If you only pay $60 a month, it will take you over 7 years to pay off that $3,000. And by the time you're done, you will have paid over $2,500 in interest on top of the original $3,000. So a $3,000 purchase ends up costing you over $5,500. That is the minimum payment trap. And credit card companies design it this way on purpose. The fix is to always pay more than the minimum. Ideally, pay the full balance. But if you genuinely can't do that right now, pay as much as you possibly can above the minimum. Even an extra $50 or $100 a month makes a massive difference in how fast you get out and how much interest you pay. Mistake number 3. Applying for too many cards at once. This is a mistake a lot of people make when they first discover the world of credit card rewards. They see all these amazing sign-up bonuses and they think, I'll just apply for 5 cards at once and collect all the bonuses at the same time. And I get it. The bonuses are real and they're worth a lot of money. But applying for multiple cards in a short period of time can seriously damage your credit score. Here's why. Every time you apply for a credit card, the bank does what's called a hard inquiry on your credit report. Each hard inquiry drops your score by a few points. 1 or 2 hard inquiries is not a big deal. But if you apply for 4 or 5 cards in a few months, those inquiries stack up. And lenders start to see you as someone who is desperately seeking credit. That's a red flag. Your score can drop significantly, which can affect your ability to get approved for a mortgage, a car loan, or even an apartment. The fix is to space out your applications. A good rule of thumb is to wait at least 3 to 6 months between credit card applications. This gives your score time to recover from each inquiry and shows lenders that you're being strategic, not desperate. If you're following the 10-card system we talked about in our last video, don't rush it. Build it slowly and deliberately. Mistake number 4. Ignoring your credit utilization. This one flies under the radar for most people, but it is one of the most powerful factors affecting your credit score. Credit utilization is the percentage of your available credit that you're currently using. So, if you have a credit card with a $10,000 limit and you have a $4,000 balance on it, your utilization on that card is 40%. Here's why that matters. Credit utilization makes up about 30% of your FICO credit score. That's almost a third of your entire score. And the general rule is that you want to keep your utilization below 30%. But here's what the top credit scorers know. If you really want an excellent credit score, we're talking 780, 800, 820, you want to keep your utilization below 10%. Below 10%. So, on a $10,000 limit card, that means keeping your balance under $1,000. Now, I know what you're thinking. What if I use my card for everything to earn rewards? Great question. The trick is to pay your balance down before the statement closing date, because that's when your balance gets reported to the credit bureaus. If you pay it down before that date, your reported utilization stays low, even if you're spending a lot on the card throughout the month. This is a strategy that most people never learn, and it can add 50 to 100 points to your credit score over time. Mistake number 5. Not taking advantage of your card benefits. This one doesn't cost you money directly, but it costs you value. And in the world of personal finance, leaving value on the table is the same as losing money. Most people sign up for a credit card, use it to buy stuff, and pay the bill. That's it. They never look at what else the card offers. And premium credit cards come loaded with benefits that most cardholders never use. Let me give you some real examples. The Chase Sapphire Reserve comes with a $300 annual travel credit. That's $300 that automatically gets applied to any travel purchase you make. If you travel even once a year, that credit alone covers most of the card's annual fee. But a huge number of cardholders never claim it because they don't know it exists. The American Express Platinum comes with up to $200 in airline fee credits, $200 in hotel credits, $240 in digital entertainment credits, and access to over 1,300 airport lounges worldwide. If you fly even a few times a year and you're sitting in the regular terminal eating a $15 airport sandwich, you're leaving hundreds of dollars in value on the table. The Amex Gold Card gives you $120 in dining credits and $120 in Uber Cash every single year. That's $240 in free money. But you have to know it's there and you have to use it. Other benefits people commonly miss include extended warranty protection, which doubles the manufacturer's warranty on purchases you make with the card. Purchase protection, which covers items you buy against damage or theft for up to 90 days. Trip cancellation insurance, which reimburses you if your flight gets cancelled for a covered reason. Cell phone protection, which covers your phone against damage or theft when you pay your monthly bill with the card. These benefits are worth hundreds of dollars a year. And they're already included in your card. You're already paying the annual fee. You might as well use everything that comes with it. The fix here is simple. Go to your credit card's website right now. Log in. Click on Benefits or Card Benefits. Read through everything your card offers. Set a reminder to use your annual credits before they expire. And start treating your credit card like the premium financial tool it's supposed to be. Let's bring it all together. The 5 mistakes that are costing you thousands are carrying a balance and paying interest that wipes out all your rewards, only making the minimum payment and staying trapped in debt for years, applying for too many cards at once and tanking your credit score, ignoring your credit utilization and leaving points on the table, and not using the benefits your card already comes with. Here's the truth. Most people will watch this video and do nothing. They'll nod along, think, yeah, that makes sense, and then go back to doing exactly what they were doing before. Don't be that person. Pick one thing from this list. Just one. And fix it this week. Maybe that means setting up autopay for your full balance so you never carry a balance again. Maybe that means logging into your card's website and reading through your benefits for the first time. Maybe that means making a plan to pay more than the minimum this month. One change. That's all it takes to start turning this around. Because here's what I want you to understand. Building wealth is not about making more money. It's about keeping more of the money you already make. And every dollar you lose to credit card interest, missed benefits, or a damaged credit score is a dollar that could have been working for you instead. You deserve better than that. Your money deserves better than that. If you found this video helpful, make sure you subscribe to Sovereign Finance. Every week, we break down exactly how money works, so you can build real, lasting wealth and stop leaving money on the table. I'll see you in the next one.